Home country bias refers to investors' tendency to favor companies from their own country over those from other countries or regions. The inclination to invest in our own backyard is not that unusual, and it's most certainly not a trait that's exclusive to U.S. investors. What's the remedy? International stocks. And that's what we have on the menu for today's ETF battles. It's a triple header coming up right after this. Stay with us. You're watching ETF Battles, an original series from ETF Guide TV, and we're glad you're here. And if you need help analyzing a specific ETF or you're not sure how it stacks up versus the competition, send me your ETF tickers in the comments section below. We could do double, triple, and quadruple headers. You can also send that request on our X feed at ETF Guide. Make sure that it's good, and also be sure to give us your exact ticker symbols. Be sure to visit the description section below. We've got links to viewer resources. We've also got links to our program judges, as well as our program sponsor direction. So don't miss it. We've got lots of good stuff down there. Today's triple header is an ETF contest that was requested by Kep19901. Thank you, Kep, for the outstanding ETF battle suggestion. Now, this is a duel between international equity funds from Blackrock, Vanguard, and Avantis. Now, keep in mind that the Avantis ETF, that's ADVE, is an actively managed ETF, while the other two are index linked. So that's a big difference, which our judges will get into. The question is, who wins this ETF battle? Well, helping us to sort through the clutter is a duo extraordinaire. We've got John Davi with Astoria Portfolio Advisors and Athan with Bloomberg. Judges, great to see you again.
Good to be here.
Hey, nice to see you guys.
So our four battle categories are cost, exposure, strategy, performance, and mystery. We're going to blaze through these four categories, and then at the end of the show, we will declare an overall winner. Keep in mind our judges can nominate wildcard ETFs if they feel there's better choices elsewhere. None of the battle outcomes are ever known in advance or predetermined by myself or our judges. So let's kick things off with the first category, cost. John, please get us started.
Sure. So VEA is 5 basis points, IEFA is 7, and AVDE is 23. So Vanguard typically wins in the low cost, passive camp. So VEA is the winner, just a few basis points cheaper than the iShares products. Really you should think about your exposures, which is the next category. VEA has Canada, EFA doesn't. So Canada makes up a little bit of return difference. As always, look at trade-in, bid offer, liquidity, because that's your total cost of ownership. But for now, I would say, VA wins just pure on management fee.
Athan, you're up next. How do you see it when it comes to cost?
Yeah, that was great, and I agree. It's whenever there's Vanguard in the lineup, it's hard to head-to-head have a lower headline expense ratio, but also just on average, the Vanguard ones don't trade that much, right? But these are still all massive funds. It's 130 billion in the Vanguard one. Even the Avantis one is over 4 billion. So these are all really big funds. They'll trade fine. IEFA definitely will trade more than the other ones, but when you're talking about, it's really close, but just by a couple basis points. I'd give this one also the Vanguard fund VEA.
That takes us next to exposure strategy. So, Athan, you're still up. Analyze these three ETFs versus each other. How do they look?
And this is where it gets really interesting, right? Because you have to really know the index provider, right? And especially when you look at other countries. So let's start with the first two index ones, which is Vanguard that uses a FTSE index. The Blackrock one uses MSCI. So the main differences there are going to be you're going to have Korea and Canada in the Vanguard fund. You're not going to have those in the iShares fund. Just has to do with how they categorize it, whether it's North America, Korea, they don't consider developed, etc. It is a meaningful weight. If you add the Canada and the South Korea, it comes up to a 15% weight in the portfolio. So it's a meaningful difference. The Vanguard one has a lot more holdings. There's 4,000, so it's a little bit more diversified, about 2,000 for IEFA, 3,000 for the Avantis one. Now, in the Avantis actively managed one, you're going to have Canada. They're not holding Korea right now, but that can change. It's not, tied to an index. Also, a lot with international, you're going to have a lot of banks. So just expect, a lot of these, even though the developed countries, you're going to have a lot of that. Avantis, just because of their nature and sort of they're a little bit more factor-based investing, they have a little bit more small cap exposure in their portfolio than the other two. It is really close. In this, I like the Avantis one. I like the fact, especially in something like international, I like that they're able to be active. They're not necessarily married to the helm of one index provider and an upgrade or a downgrade in a country. So it's really close, but I would give this edge to the Avantis one just because of their ability to be a little bit more nimble.
Okay, I got you down for AVDE. Thank you very much, Athan. You're up next. John, how do you see it when it comes to exposure strategy?
I'm partial to active because at the end of the day, we're active managers too. I'm partial to factor-based investing because we're factor-based investors. If I were to use a tool like this, I would use AVDE just because I think general rule of thumb in active, you want to be active in small caps, micro caps, international fixed income, where there's less efficiencies. So to me, when I start thinking about non-U.S. markets, Canada, Korea, developed markets, it just seems like you want to be pick and choose your countries, and I like what they're doing. They're picking cheaper stocks that have higher quality, profitability factor. So I give my edge to AVDE because just they're doing what I would personally do if I were building an international stock portfolio, mixing factors, picking cheap stocks, doing an overlay with quality factors. So AVDE is a winner.
That takes us next to performance. And John, you're still up. So break it down for us. Which of these three ETFs stands out?
Okay, so the Avantis one was launched in 2019. Obviously, when you talk about IEFA, Vanguard, FTSE products, you're going to have a lot more history. So VEA goes back to 2007, and then IEFA goes back to 2012. So it's kind of a long time ago. Avantis, kind of relatively new firm, but just in the instance that Avantis has been around, so year to date, 1 year, 3 year, they both beat. And I understand that 3 years is not a ton of time, but I think picking and choosing higher quality stocks in general, over long periods of time, has shown that there's an outperformance potential. And you see it in the last, 1 year, 3 year, year to date for Avantis. If you go back, to just now the other two vehicles, I would say VEA wins on a 5-year basis versus EFA. And then on a 10-year basis, EFA, wins. So and that has to do with Tom was saying, the Canada, the Korea issue. I think it's a mixed bag. AVDE is my winner overall. I'm kind of hinting towards that. I like what it does. It only has a 3-year track record. If you go just on the 5-year and the 10-year, it's a split. So I would say it's kind of overall a split winner, depending on how you cut up the time period you're looking at for performance.
Great analysis. Thank you, John. Athan, you're up next. How do you see it when it comes to performance?
This is really interesting. So if we start with the two indexed ones, Vanguard and IEFA, even though there's such a difference in the country weights, over the 10-year period, there's only a 1% difference in performance, right? Which is makes me wonder, does the country selection really sort of matter, right? Because they're sort of getting you in the same exact place. Vanguard one's a little bit cheaper. They're almost exactly the same. But to John's point, it's got a shorter track record, but AVDE is really starting to shine above these other names in the last couple months, even year or so. So it makes me think that sort of security selection is more important here, and it seems to be working. So I like that they are able to do that. I think if you just want cheap exposure, go with VEA, but I think in this case, in international, and the fact that they have this value tilt, I think it's a big advantage for them in being able to outperform in such a short time period. So the performance for the other two is very close, but AVD is really shining in a very short period, and that really sticks out. So I'm going to also pick the actively managed Avantis product, AVDE.
Excellent. Well, that takes us next to our mystery battle category. This is where our judges can give a single factor or maybe multiple factors that they think are pertinent and crucial to today's contest. So, Athan, what is your mystery battle category, and which of these three ETFs wins it?
So I want to look at sort of factor loadings, right? Like value and momentum. And what's interesting, like international is much cheaper than say like US stocks, right? That's sort of been a story for a long time. But of these three, the Avantis product is even cheaper. It has more even a value tilt than the other two. And I know we've heard this story forever that international will come back, but at some point it gets so cheap that it has to work. And I like the AVDE is going for the cheapest of the cheap, right? And I think that's a big advantage. So it does have more of a value tilt, has a lower PE than the other two funds. So I really like that. I like that it's really looking for value within already a cheap area. So on sort of factor loading, that value tilt I think will push me to pick AVDE over the other two.
John, you're up next. How do you see it when it comes to your mystery battle category? What is it, and which of these three ETFs wins it?
I thought about dividend yield, and the dividend yield for VEA is 3.3%, a little bit higher than IEFA, which is 300 basis points, and then the Avantis, which is 2.8. And I just think that, we should think about things in terms of total return. And, it's a nice, right now, Europe, Japan, you've got higher, I would say, dividend yields compared to the U.S., almost double. So that's kind of interesting. Share buybacks, kind of total yield, total return. I think that's important. So that's my category winner is VEA for dividend yield.
Wow, that was a surprise mystery battle category choice. Thank you very much for blindsiding us, John. Now we go to the part of the program where our judges can give us their overall battle winner. And both of our judges have made some excellent points up until now, and they've been convincing arguments. So, John, which of these three ETFs is your overall winner?
I'm partial to AVDE. It's doing what we do, which is active management. It's blended factors. It's factor-based. That's what we are at Astoria Advisors. It has better returns on a 1 year, 3 year, basis. I think at the end of the day, like when you're looking at like total non-U.S. markets, I think you better be pick and choose. You better be picky and choose which markets you want, whatever your view is. We just think at the end of the day, buying cheap stocks that have high quality characteristics wins in the end, and that's what AVD is attempting to do.
Athan, your final chance to weigh in with your overall winner.
Yeah, I'm no surprise here. I like AVDE as well. I know it's more, it's, let's say 3 times more expensive, but it's only 23 basis points. I think you're getting a lot for 23 basis points. And again, this fund's only been around just over 3 years. It's already got 4 billion. Like that's really impressive in international. So I think it's a pretty special fund. The performance I think speaks for itself, and I think moving forward, I would want to be active in international. I think it's showing that security selection is more important than just sort of country allocations. And so my overall winner would be the Avantis product, AVDE.
Well, thank you, judges, for your outstanding analysis. And according to our battle scorecard, today's winner is AVDE from Avantis. And our judges made some awesome points, agreeing that, listen, even though AVDE charges a higher expense ratio than both of these other index-linked ETFs, it still has been justified. If you take a look at the performance, recent performance, 1 and 3 years, it's done quite well. And even though it doesn't have just yet that longer-term performance, it has still shined in the short time that it has existed. And so AVDE was their choice. They also mentioned that they like that value tilt. And both also emphasized that, hey, that active approach has certainly helped. And one final point that I'd like to make is for 23 basis points for an actively managed ETF with a value tilt, I think that's still, if you compare this to what mutual funds and other products are charging, it's still a very good deal for the investor. So great job to both of our judges for weighing in with their excellent, excellent points. We couldn't have done it without you.
Thanks, guys.
Thank you, guys.
Be sure to check out the description section below. We've got links to both of our judges. And also check out the link to our program sponsor direction. Get in touch. Which ETF battle would you like to see on the next episode? Send me your ticker symbols in the comment section below or on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you on the next episode.